Now, see, today we are discussing about financial statements. Fine. So XYZ is a company, and this XYZ company is into manufacturing business. Okay, that means they manufacture goods and they sell those manufactured final products to their dealers. Dealers sell to wholesaler, wholesalers sell to retailers. So there are many organizations involved in this process of like the of kind of the final goods which the customers get. They are not getting directly from the manufacturers, but they are getting from the retailers. So manufacturers are involved, dealers are involved, wholesalers are involved, retailers are involved. All are businesses, correct? So now one question I want to ask you: if this manufacturing company, which is into manufacturing, if this company wants to know the end result, that means you do any task with a motive, am I right? So you're doing your CMA because you want this certification, and how will you know whether you have cracked the CMA exam? After writing the exam, when you get the results, you come to know that you have really cracked or not the examination, correct? In the same way, companies here are for one motive, that is what? What's the motive of a company? Profit. And to know this profit or loss, whatever the result will be at the end of the year, what they shall do? They shall prepare financial statements. So we do some task with a motive. The companies which are into manufacturing or into service sector or any sector, they perform their activities, they deliver to the customers, and they work with a motive. The motive is very clear. They want to earn profits to sustain, to continue. If they want to know their profits at the end of the year, they have to prepare financial statements. Now this financial statement I will divide into some parts. The first statement what they make is profit or loss account. As per US GAAP, this is what the terminology they use. As per IFRS, they use the terminology called SOPL, that is statement of profit or loss. Okay. Second, they prepare balance sheet at the end of the year, and in IFRS we use the terminology statement of financial position. Then they make one more statement, that is the statement of changes in equity. So I will expand this profit or loss. It is like profit or loss and other comprehensive income. Okay, this is a new section. This is a new section which is introduced very recently. So SOPL and OCI. I will explain you what is this other comprehensive income as we enter deeper into the subject, okay, or as we go further into the chapter or topic. Then comes the statement of changes in equity. The same thing comes here, statement of changes in equity. I'll explain you what this statement of changes in equity means. And then the last statement is SO, that is cash flow statements. And here we say statement of cash flows, SOCF. Okay, so these are the statements what a company has to prepare, fine, at the end of the year, to know their end result at the end of the year, whether they have earned profits or not. You know, if I speak about XYZ company, let's say it is a public company, or for let's say it is a private company, you can take it into any like a category. If it's a private company, then even the motive is profit. If it's a public company, then even the motive is profit. And to know, they have to make these statements, correct? So but the task in the private company, only the owners of the company, they would like at the end of the year like check what is the end result of the business activity what they are performing. But in the case of public company, they do it for shareholders, because the actual owners of the company are shareholders, isn't it so? All of you, who are the actual owners of the company in public company?
Sharehold.
Shareholders. So the shareholders want to know about the company's performance at the end of the year. Okay, so they would check the company's performance, and that will give them an idea whether the investment what they have done, what is the scope of that investment, whether the investment is going to grow in the coming future. See, if the company is profitable, of course you feel more confident. If you continue with you feel more confident to continue with such kind of company, isn't it so? Do you think like a loss making company can give you a bright future? Never. That's never going to happen. So the whatever the results are, you can know with the help of all this. Okay. Now today's chapter is all about knowing and understanding what these statements are. Okay. So we'll understand these statements right now with the help of some formats. So I'll put the format in front of you. So here I am. I'm just starting with SOPL, statement of profit or loss. Okay. So we will start with revenue. Revenue is also called as sales, correct? Now, see, when you were in your college or your intermediate, like 10 plus 2 days, you used to make the statements in T form. Am I right? Please tell me yes or no, all of you.
Yes,
Yes.
sir.
Yeah.
Yes. But now these days, T form is not followed. You are just following the vertical statement or vertical formats you are following to make statement of profit or loss. That's the standard these days. Okay. As per US GAAP or as per IFRS. Now, revenue. From revenue, what we will deduct? Yes, if at all there is sales returns, we'll deduct the sales returns. Then what we get? We get net revenue or we get net sales. Okay, less COGS. So what is that which comes under COGS? We take opening inventory if at all we have. We take purchases. See, whatever the subtotal of this COGS would be, that would be subtracted from the net revenue to get gross profit. That's the reason why I have put here minus sign. But in internal elements of this subcategory have to be added up. Okay, the sum has to be deducted from net revenue. So purchases, if at all there is purchase return, less purchase return here itself. Okay, minus closing inventory or closing stock. So altogether the sum total of this would come here, and when you deduct your COGS from net revenue, what you get? Gross profit. Okay, just make a note of this till here. So let's say I give an example. You bought 100 boxes. Is it necessary that you will always sell 100 boxes? No. You bought, see, you bought 100 boxes. Each box is costing you $10. Correct? So what is the cost price of each box? $10. You want to sell each box for $12. So the selling price what you have fixed is $12. Now, like, do you think always every business would be successful to sell the entire stock on daily basis? No. Let's say 80 boxes have got sold. How many boxes?
80 boxes.
80 boxes. So now you would like to know what is your profit for 80 boxes. Am I right? Not for 100 boxes. So because you are generating revenue for 80 boxes and you need to compare your cost for those 80 boxes. Correct or wrong? As per the matching principle or matching concept. Yes or no, all of you in chorus?
Yes, sir.
Yeah.
Yes. So you generate revenue for 80 boxes. So 80 into 12 gives you
960.
960. Okay. And then this is like revenue less COGS. Let's say you don't have any opening inventory. So opening inventory is nil. How many boxes did you purchase?
100.
You purchase 100 boxes.
100.
100 into 10.
10.
Okay. Less how many is the close? How much did you sell? 80. So how much you did not sell? 20. So I'll
20.
deduct the closing inventory from this. 20 into 10. So what do you get? 80 into 10, 800. Can I say this is your cost? Can I say this is your cost?
Yeah.
Can I say this is your COGS? Yes. So
Yes.
960 minus 800 is 160. Can I say that is
160.
your gross profit? Yes.
Yes.
Yes. If you would
Yes.
have taken directly, you would have got this. 80 into 12 is your revenue minus cost. Cost is 80 into 10. So 960 minus 800 is 160. We can do this directly, but you always follow this format. And many students ask me why we deduct closing stock. Can you just explain me the mechanism in detail? So I have explained the mechanism in details. Okay. Just go through this. Just write on this format till here. I am moving forward fast. Once done, tell me, I'll move forward. Hello, done?
Yes,
Yes.
sir.
Yeah, yeah. Just a second. So now we are moving forward. So gross profit, this is not the end, because ultimately we have to reach to net profit. So less operating, administration and selling expenses. So you may be having an idea about operating or administration expenses, correct? Office rent and you pay this audit fees, legal expenses, electricity charges, printing and stationery, postage and telegram, all which you have learned while you made the company statements or company accounts, correct? And selling expenses are discount allowed, advertisement expenses, promotion and branding expenses, all this. So I'm not writing the details here. I hope you know these details, correct? Or you want me to mention? Yes.
No, sir. No.
No, you have an idea, correct? So you
Yes.
deduct operating, administration, selling expenses. The next profit what you get is operating profit. And that operating profit is also called as PBIT. Okay, which you have already come across this particular PBIT figures during the ratio analysis class, isn't it so? Next, less add non-operating incomes. So what are non-operating incomes? The incomes which you do not earn from your business or your operations. You earn this from some other sources or from some activities which you don't perform usually on daily basis. So is it like whatever the surplus you earn, what will you do with the surplus? You'll be investing it in the market. You'll be buying stocks. You'll be buying bonds, etc. So those will be giving you returns or not? Those will be giving you returns or not? Yes.
Yes.
Yes, sir.
If you buy a stock, the stock gives you dividend and its value grows. If you if you purchase bonds, bonds will give you what? Interest. So are these investment incomes or not? Please tell me.
Yes,
Are
sir.
these investment incomes or not?
Yes. Investment.
Yes. So these are investment incomes, and your business is you are into manufacturing process. You are not in investments. What I mean to say is every company is an investor, but that is not their routine activity. They do it once in a year, correct? So dividend received, interest received, these are all investment incomes. And then if you have some idle asset which you are not using and it is just kept like that, that means if you don't use any asset, it will become a scrap. So instead of that, if you can sell it and make some profits or get some profits from that sale transaction, it will be better for you. Okay, so since you don't often sell your assets, you are into the process of, if you are a manufacturing concern, you manufacture some goods and you sell in the market, isn't it so? So that is called your inventory. Or if you're a trading concern, you buy and sell goods to people. That means you're into trading business. So there you are involved in selling inventory, not selling assets, isn't it so? So profit on sale of asset is what you don't usually do, you do it occasionally. So hence the reason it is also termed as non-operating income. Okay, there can be many, but these are the ones I'm explaining you. Just write down less. So this is profit. You add profits to profit. You subtract the expenses from profits. Okay, so less non-operating expenses. These are the format. What comes under non-operating expenses? Please tell me. Yes, Suman, I'm asking you a question. Dividends paid, is it a non-operating expense? See, dividend received is a non-operating income. Do you think dividends paid is a non-operating expense?
Yes.
Yes. Promote, any idea or clue? Is it
Yes.
right? Yes.
Dividends paid is yes.
Yeah, Kalyani madam, do you have an idea whether this is a non-operating expense or not? Hello. Yes, Kalyani madam, are you hearing my
Yeah,
voice?
non-operating expenses ones.
No, all of you are absolutely wrong. Why this is not a non-operating expenses? Dividends are never an expense for the company. Dividends are never an expenditure for the company. What happens? What is this dividend? See, this is net profit of the company, correct? Suppose let's say net profit is $100,000. So this net profit is transferred to an account called retained earnings account. Which account?
Retained earnings.
So I am transferring this $100,000 to retained earnings account as current year profits. Now what will I do? Will I keep this entire profit with me, or I'll like some part of this profit I will distribute as dividends? Of course, I have declared 20% dividends to the shareholder. That means I declared that I will pay 20% of my profits as dividends to my shareholders. So now, if I pay $20,000 to them, how much I am left over with? $80,000, correct? Can I say
Yes.
this is my retained earnings?
Yeah.
This is my retained earning, na? See, this is my current year profit which has been transferred to an account called retained earnings account. So in that retained earnings account, 20% I have paid as dividends and 80% I have retained. So the dividends what I paid to the shareholders, I paid it after getting net profits. Am I right? After getting
Yes.
net profit only, I have decided to pay them the dividends, na?
Yes, sir.
How did I get my net profits? After settling all my obligations or after leaving some of my obligations?
Settling everything.
After settling all my obligations, I got net profit. So did I show dividends anywhere in my income statement as an expense?
No.
Did I show dividend payment as an expense anywhere in my statements?
No, no, no.
No, this is the shareholders' right, what they should be getting from the profits. See, dividend is never an expenditure for the company. After settling all the obligations, the final profit which is left over is nothing but whose profit? It is shareholders' profit. They have the right over this amount. But what happens in the annual general meetings? The directors, they say to shareholders that why would you like to take the entire profits of the company? Instead of that, some part of profit we will distribute to you, and the rest of the part what we are retaining we will reinvest in some other project. With that, what will happen is your net worth in the company will grow. Understood what I'm saying? Hello.
Yeah, sir.
Yes.
What?
Yes.
Yeah. So if the company retains the money, why are they retaining? They want to reinvest again. If they reinvest, who is ultimately the owner of the company, the shareholder? He is going to benefit from that investment. No? That investment is going to give him incomes. Correct or wrong?
Yeah.
So now the question is, how come this dividend is an expense? It is never an expense. It is just our shareholder's right from the profits. That means he is getting some fraction of profit as a distribution to him. Correct? So dividend paid is never ever an expenditure, never ever it is shown in any of the, never ever it is shown in the statement of profit or loss or income statement or profit and loss account. It is just deducted from the current year profits after transferring the current year profits to retained earnings account, because this is what is the right of a shareholder to get, and this he gets from the profit which is which is the figure which company gets after settling all the obligations. Okay, so now here we are. Dividend paid is never ever a non-operating expense. To confuse you, I have given this, I have just asked you about the dividends paid. So never ever it is a non-operating expense. It is the shareholder's right, not an expense to the company, correct? Company is just distributing them. Now, what comes under non-operating expense? Of course, interest paid or finance charges, whatever it is, penalties, fines. There are some fines also, no? You pay sometimes fine, penalties. All these are not your routine or recurring nature expenses. You pay them once in a while. Do you pay fines every day? Do you pay penalties every day?
No.
Please tell me.
No, sir.
No.
So these are not recurring nature routine expenses. Okay. And also these are not the expenses, not your operating nature expense. What is your operating nature expense? To run your business, you pay rent. To run your business, you hire a lawyer. To do audits, you hire a auditor. But fines, penalties, fees, loan, whatever you take, see, you take loan to run your business. I'm not saying that you don't take loan to run your business, but loan comes under a different kind of activity or different category of activity, that is called financing activity. Your business is into manufacturing. Is it into finance? No. Correct?
Yeah.
If I take a bank, if I take HDFC Bank into picture, yes, for HDFC Bank, paying interest is a routine nature expense. It depends from organization to organization. That's the reason why bank accounts are different from the general company statements, isn't it so? When you prepare a bank account or bank's financial statement, it is way different from the statement what we are seeing. They have a different kind of format and different kind of concept what they use for making a bank account. But if I speak about a manufacturing company, a trading concern, or any other company, like a general business, not a special entity like electricity company or banking company, these are all special entities, service organizations. I'm not speaking about service organization, I'm speaking about general business. This is the format we follow, and these are not the routine activities what they do. These are not their operating activities. Okay, so interest paid, finance charges, fines, penalties, all are non-operating expense. We deduct this, we get PBT, that is profit before tax. We deduct tax.
Tax.
Then we get PAT. Okay. Okay. So please note down till here. Anyone has got any doubts can immediately ask me. Pramod, have you got any doubts in this?
No, sir, it's clear.
Okay. And Suman, do you have any doubts in this?
No. Fine.
It's clear. Okay.
Yeah.
So have you noted it down? Shall I move forward or noting?
Noting.
Okay. Please note it. No problem.
So is the COGS, is that a rule or does that change topic to topic?
No. See what happens. COGS in general, this is for trading concern. Okay, but there is a COGM also.
Manufacturing.
What is that? Cost of goods manufactured. See, COGS is for trading concern. What did I take in COGS? I took opening inventory, I took purchases,
Closing stock.
I took just minus closing inventory. Am I right? But in COGM, I'll take opening inventory, I'll take purchases, I'll take some direct expenses, direct nature expenses related to manufacturing. I'll take direct manufacturing expenses. What will I take?
Direct
Manufacturing, yeah, manufacturing expense also I'll take minus closing stock. That means here one more thing, am I adding one more thing here?
Yeah.
Yeah.
Because this is also a part of the cost now.
Okay.
Direct manufacturing expenses or manufacturing overheads, aren't they a manufacturing related cost? Aren't they manufacturing related cost? Please tell me.
Yeah.
See, what is the difference between direct manufacturing expense and manufacturing overheads, Pramod? Hello.
Yeah. Yes.
What is the difference between direct manufacturing expenses and manufacturing overheads?
Go ahead, sir. I don't know.
No, I'm just asking you if you can try to answer. Okay, otherwise I'll explain. So what the difference is? What is the difference is? Direct manufacturing expenses are something which you incur directly in the manufacturing process. That means the wages which you pay to a labor, wages paid to a labor, the labor who is directly working on a machine and is directly involved in the manufacturing process, correct? So
Okay.
to him, whatever the wages you pay is nothing but direct wages. So that's a part of direct expense, isn't it so? Direct manufacturing expense. But this is a factory, this is a machinery, and on this machinery there are 4 laborers working, and there is a supervisor who is supervising all the operations. Let's say supervisor who is not directly working on machine, okay, and there is a security guard who is giving security to this entire factory, and he is also not involved in manufacturing process, but still they are in the factory, they are not in the office or administration, okay. So whatever the salary I pay to him, salary to the security guard or supervisor's salary, are they direct manufacturing expense or indirect manufacturing expense or manufacturing overheads?
Indirect
Direct.
manufacturing overhead.
Direct or indirect? See, who is working on this machine? Who is directly involved in the production process? One,
4
two,
people.
three, four. Is this particular security guard who is giving security to this complete factory premise, is he directly involved in production process? Is he taking any inventory or lifting any load or something and taking to the machine or
No, sir.
operating the
No.
machine? Is
No.
he involved in that? No. Is the supervisor involved in direct manufacturing, or is he just monitoring all the tasks? He's just monitoring the task. So these guys are, what they are doing is they are supporting this direct activity. What are they doing?
Support.
Supporting.
Yeah. So when I speak about this supporting activities, when I use this word called support, there I'm speaking I'm speaking about indirect manufacturing expenses, or I'm speaking about overheads. Any indirect expense is called as overhead. What is that?
Overhead.
Overheads.
Yeah, indirect expenses, whether indirect manufacturing expenses or administration expenses, all are of all are indirect expenses, correct? That means why they are indirect expense? They are never involved directly in the prime activity of the business. What is the prime activity of this company? Manufacturing, isn't it so?
Manufacturing. Yeah.
Yeah.
You are working in a company now, you are working as an analyst, you are working as an accountant. Are you directly involved in the manufacturing process if you are in a manufacturing company? No.
No.
You are just working in the back end. You are involved in the back end process, correct? So you are just supporting their activity. So the so whatever the expenses we incur for support activities are nothing but indirect nature expenses for the company, and every nature expense is called as overhead. That's the reason why I use the terminology called manufacturing overhead. So whatever the wages I pay to labor is a direct wage, but whatever the salary I pay to security guard, I pay to supervisor, is nothing but what are these? Manufacturing overheads.
Overheads.
Okay, make a note of this. So COGS is same in every company, Pramod, but what
Mhm.
happens is specifically when you are into manufacturing process, you also have this direct manufacturing expenses as well as manufacturing overheads. So you have to include that in the COGS, hence it becomes COGM. Understood?
Okay. Okay.
Yeah. But COGS, what we have discussed right now, everywhere the COGS would be in the same format only.
Okay.
So have you gone through the videos of ratios?
Yes, yes, sir. Not everyone, not every video. I was able to complete 4 videos, 3 videos,
For
sir.
3 videos. Okay, so I
Yes,
think you have done the current ratio, quick ratio, correct?
yes,
And you are about to do the turnover ratios or
yes,
profitability ratios next,
yes,
correct?
yes, yes.
Yeah. So what was your take on this current ratio and quick ratio? Those were crystal clear to you?
Yeah, I have some doubts, sir. I will sit with you when you are free.
Yeah, you can come this weekend, no?
Yeah,
Pramod, this weekend we can schedule a class for that. Okay.
yeah, I will plan that, sir.
Yeah. So you have major doubts or like some part of somewhere, just somewhere you're stuck.
On the problem side, I have some doubts, sir. And on the topic wise, I have some doubts that I need to ask you.
Okay, okay, fine. So you can come this weekend, but almost all you're able to grasp everything, you're able to
Yes,
understand everything out of it, correct?
yes, yes.
Not that tedious right now, as far as I'm concerned.
Yeah, we can go. I was planning to do. We can do a Skype call, sir, on Saturday or Sunday.
Skype call, probably if you can come directly, that would be great, na?
Okay, okay, okay.
Yeah, for
I
me,
will.
the entire Saturday, Sunday is on Skype only. Okay.
Oh, okay, okay. I will come down, sir. I will come down to
Yeah,
you.
yeah, that would be better. Face to face, you can clarify your doubts.
Yeah.
So, but no, I'm asking not that major issue, correct? Like you are able
Yes.
to understand, like 10% or somewhere you're stuck, we'll resolve that, okay?
Okay.
So till here, everything you have understood, na? PAT?
Yeah. PAT.
Yeah.
Yes.
Yeah. So now I'm just showing you the format. There's a detailed format what they have given in the textbook. Just see here. So this is a format we discussed till here. It is like they removed the provision for income taxes or income tax they removed. Okay. And till here what they got is income. See, they started with revenue less COGS. They got gross profit. They removed the administration selling expenses. They got operating income, which is also called as PBIT or operating profit. Then I said you have to add non-operating incomes, which is interest and dividend income. What they did is they added, and you have to deduct the non-operating expenses, which is what they have subtracted. Okay, this you have to subtract. And then non-operating gains or losses. See, gains or losses you only get when you sell some asset. It's a one-time profit, isn't it so? Do you think whatever the assets you are selling on routine or daily basis? No, you sell it once in a while, so you get some gain or loss. So anything you have to mention and you have to account it. Okay, so that we have added here. If it's a gain, if it's a loss, we will subtract. So you get what? Income from continuing operation before income tax. What is the terminology they are using? Income from
Continuous
Continuing
operation.
operation.
continuing operations. That means you want to run your business, still you want to run your business. It's not a business which is going to stop its activities. Okay, then you have income tax provision which every company makes, that they have to pay so and so amount of income tax to the government. Then you get income from continuing operations. Then what happens? Suppose you want to sell some of your plant and machinery, or some you have some one or two businesses. See, you know the concept of parent and subsidiary. Do you have an idea? Do you have an idea about group accounts? Okay, so this is a company, this is a P company, this is a S company. P company has 80% holdings in S company. That means 80% of the stocks of S company are whose now? P's company, correct? P company stocks, correct? So P company is called parent company, S company is called subsidiary company. So like this, the parent company has S1, S2, S3, three subsidiaries. In these three subsidiaries, S1 and S2 are very profitable business. S3 is a loss-making business. Do you think any company would like to continue with the loss-making business despite of some attempts what they have made to make this a profitable concern? They have put all their efforts since 5 years. They're trying their level, but they're infusing capital into that. They are giving them financial support. Whenever the financial crisis comes, they are investing in that S3 company. They did all sorts of activities and everything they tried, but still it's a loss-making business. So do you think they want to continue this business, or they want to just sell this?
They will sell this, sir.
They will sell this. Common sense prevails. So now, no company can sell it immediately. First, they have to show that company in a category. That category is called held for sale category. What is it called?
Held for sale category.
Held for sale category. That means they want to sell this particular company, okay, or they will show that as a discontinued business. Then they will sell it. So, if at all you get your income from continuing operations, which is nothing but net income or PAT, then if at all you are selling any of your businesses which is a loss making business, okay, that business would be first shown in the category of discontinued business or held for sale category, and then you will sell it. When you sell it, there can be two things. One is there can be a gain, second is there can be a loss. So if there's a gain, you have to add that amount, and if there's a loss, you have to subtract that amount. Okay, so gain or loss from operations of discontinued component or business. Fine. That means you'll be getting the gain or loss only if you dispose that business or sell that business to some other company, some other customer, some other investor or someone else in the market. Now, if there is a gain from discontinued operation, any gain you get, are you not liable to pay taxes to government? My question. Are you not liable to pay taxes to government? Please tell me.
Yes, sir. We
Yes.
need to.
So definitely you will be paying income tax for this gain. Okay. Maybe it's a capital gain, so you'll be paying you'll be paying tax on capital gains. And if it's a loss, will you pay taxes or you can claim benefits? So if there is a gain, so you pay income tax, less income tax. If there is a loss, will you pay taxes? Please tell me. Is there a need to pay taxes?
There will be a subsidy, right?
No. See, subsidy, yeah, of course, you will get income tax benefit. That's what.
Yes.
So that you have to add. Okay. So then you will be getting the final net income from this. So what we did is we got income from continuing operations. Okay. What we did is we have some business which we have discontinued now. That means we don't want to run that business. We sold it, we got some gain. If we get a gain, we have to reduce the taxes. If we get a loss, we need to add the benefit. After doing all this, see, any of these two can only happen. Let's say you sold S3, a subsidiary which is a loss making business, you got a gain, so you added and you deducted the income tax. You sold S2, okay, which is also one of the loss making subsidiaries, except in second example there are three subsidiaries here. So subsidiary S3 is a loss making business, and previously we discussed these two are profit making business. Now let's say these two, both of these are loss making businesses. So they sold S2 also, and in that they got a loss. So they need to pay tax? No, they'll get a benefit. So you have to add. So when you adjust all these things, you get the final net income. That is the final figure which you got here. Okay. So this is the income statement format. You have to prepare this income statement format to find out your net income at the end of the year. Okay. Just have a look to this statement, then we'll move forward.
Sir,
Any doubts you can
in
ask.
that
Yeah, please.
gain or loss from operations of discontinued, why
Yes.
they are not specific on that, sir? If you said that if it is a gain, we need to add it. If it is a loss, then we need to subtract it. So if they
Yeah.
say both
If
things,
there is
right? Gain and
no,
loss.
see, gain slash loss, not gain and loss. That is
Okay.
gain or loss. They're asking. They're saying.
Okay.
Do you think can you have two things in one transaction? Gain and loss both?
No.
That's what I'm
No.
saying. You can't have, no? So if
Yes.
you have a gain, you show the gain. If you have a loss, show the loss. Anything can be there out of the two. If done, then we shall discuss about the balance sheet. Shall we go ahead?
1 minute, sir.
Yeah. Okay, man. because I need to wind up this particular first chapter in 2 days, in 2 classes, so that we can start do some 20 questions of this chapter also. Yes, Suman, have you like finished this? You're so silent today.
Yes, sir. I'm referring to textbook as well, no?
Okay, fine. No, you're too silent, not asking any doubts. So that's the reason I asked you.
No.
Okay.
I'm reading content
Yes,
also
yes.
on the textbook.
Great. Yeah, you can do that. You can do that. See, I have not explained you any content of the textbook. Just I focused on the format today. We'll also
Yes.
explain the things. No need not worry.
Wait.
We'll discuss. This is a pretty simple thing. Textbook content and all. You almost will be knowing everything. So, okay, madam, you are doing that.
Yes, sir. Yes. Done, sir.
Done, na?
Done.
Now what we can do is we can also discuss the balance sheet format. It'll take 5 minutes of time, 5 to 10 minutes. Let us wind up. Then we can go in details of the things in these two formats. See, everyone of you may be knowing what is a balance sheet. Isn't it so?
Yeah.
Why you prepare balance sheet at the end of the year? To know the actual position of your business at the end of the
Financial
year.
position of the company.
Yeah, financial position. That means you want to know how many assets you have and what are your liabilities at the end of the year. Okay, with which so if you are a private company, you are just concerned, you are individually concerned. But if it is a public company, the shareholders are concerned. Okay, so now previously you used to make T-shape accounts for balance sheet, whereby you used to show current assets, non-current assets. Okay, what are current assets? These are the assets which give you economic benefits within 1 year of time, correct? Within a short span of time. Non-current assets are such assets which give you economic benefits beyond a year. That means it takes more than 1 year for you to get economic benefits from such kind of assets. For example, you bought a plot in city outskirts. Okay, you bought a plot in Shamirpet or some area, let's say. Do you think it's going to give you immediate returns?
No, sir.
No, it will take 5 to 10 years or 20 years for that area to develop. Then you may get superb returns from that. You may be buying a plot for 30 lakhs today. Maybe after 20 years, you may be selling it for 2 CR. It is possible. Why? Because that area would develop, demand crops up, the demand would come for the plot, and people will be ready to pay whatever you quote. Isn't it so? Seeing the demand in the market. So, current assets are something like you have some treasury bonds. Treasury bonds are for how much duration? 90 days. These are issued by US federal government. That means central government of US, they issue treasury bonds, treasury bills. I'm saying treasury bills. The treasury bills have a maturity of 90 days. Okay, this is a security issued by the government. Okay, and the maturity is 90 days. Till 90 days, they'll pay you interest for whatever investment you have done. So is it giving you benefits within 1 year or more than 1 year it is taking to give you the benefits?
Within 1 year, sir.
Within 1 year. So it's a current asset, of course. So there are many current assets like inventory. So you have done the ratio analysis chapter, no? So in that I've mentioned everything clearly about current assets, non-current assets. Did I mention? Yes, I mentioned. Yes, Pramod?
Yes.
Yeah, so we have discussed that. So current assets, non-current assets will give you total of assets. Then equity and then debt. Debt is again divided into long-term debt and then short-term debt. Okay, then this gives you total of stockholders' equity and liabilities. It's not total of liabilities. It's total of stockholders, shareholders equity and liabilities. Okay, and total of assets should always be equal to total of shareholders equity and liabilities. Then only the balance sheet is tallied. So now the first year balance sheet is, let's say, 10 lakhs. What do you got? 10 lakhs. So this is what you keep it. You have just like noted down that the balance sheet, what the first year balance sheet, what the figures it depicted or showed is 10 lakhs. Next year, company's balance sheet is showing 20 lakhs of assets and 20 lakhs of liabilities. Yeah, I understand that the assets have increased and the liabilities have also increased. But what matters is, has the company's valuation gone up or it has gone down?
Gone up, sir.
Gone up. How the company's valuation can go up?
Based on assets.
Yes, Pramod? Yes, madam, you are right. See, 10 lakhs in the first year, the balance sheet total was 10 lakhs. Now this year, the balance sheet total is 20 lakhs. It's twice of the 10 lakhs, correct? So the balance sheet total has gone up. Can it go up like that, Pramod?
Yes, sir. But even the liabilities is getting increased at the same time, right?
Yeah, of course. Liability may increase. I'm not denying the fact. Liabilities may be there, but as on today, your asset value is increasing or not?
Yes, assets is increasing. Yes.
Yeah, see, never ever in this universe you'll see any statement whereby the assets will be more and liability will be less. Assets and liability has to balance, of course. That is only the balance sheet, no? But
Yes.
what is the position of your business? If liabilities are growing, that means your business is growing. That's the reason why you're borrowing more, isn't it so?
Yes.
Why will you borrow more?
Because we have
Let's say Pramod has bought an apartment recently and he has taken a loan of 45 lakhs. Okay, and he is staying in this apartment. He has some 15 lakhs of cash now. See, he bought an apartment 2 years back. Okay, so 2 years back he has taken a loan of 45 lakhs. He invested 20 lakhs in this apartment, interior, everything. Now he has to pay. The flat value is 65 lakhs, 45 loan taken, 20 lakhs investment done. So 45 lakhs he has to pay. Now in 2 years he has again saved some 15 lakhs of cash. Now what will he do with this 15 lakhs of cash? He'll again try to invest, correct?
Yes. Yes, sir.
Of course, again he will take an apartment, he'll pay a down payment, take a flat, and again 45 lakh rupees loan he will take. So what happens now? His liability has grown to 90, correct?
right.
Is the liability not grown? Liability has grown, but as now he owns two assets now. His assets have also grown, correct or wrong?
Yes, yes.
Yes.
Apart from that, this assets value will increase one day. Today, the flat which you bought is of 65 lakhs, it will become 85 lakhs, 90 lakhs, 1 crore, anything it will become, correct? So your investments grow, your liabilities also grow. That shows that your business is growing. Am I right?
Yes.
And that is very satisfactory for an investor to see that his balance sheet totals are growing every year. If the balance sheet total goes down, business is that means assets are losing their values. Now you'll be asking a question, sir. Of course, now if I take a plant and machinery, it will get depreciated every year. I'm not saying about plant and machinery. What are depreciable, but there are certain assets which are appreciable even. Suppose you have a land, it appreciates. Suppose you have invested in some stocks of some companies, those stock value is going up. So these are the assets which are increasing your asset valuation, correct? So all this matters for an investor. If the balance sheet value is increasing every year, that means their net worth is increasing every year. That is a very satisfactory thing for a shareholder. That's why I wanted to explain you. Okay. Now,
Right.
yeah, if I speak about current assets, I speak about inventories, I speak about cash in hand, I speak about cash at bank, I speak about like short-term investments or marketable securities. I speak about prepaid expenses. I speak about outstanding income. Okay, so you have today entered into this chapter. You know, it's not the end of the class today. After this class, you yourself should be reading the textbook, and also if you want, you can like get some inputs from the different websites. Okay, try to research more and more on the subject. It becomes easy. These are all current assets. Then land and building, plant and machinery, leasehold premise, like patents, trademarks, copyrights. All these are intangible assets. These trademarks and copyrights. This gives you a total of assets. Okay. Now comes the liability. So what we'll be taking under liability? We'll be taking all the current liabilities like bank OD. We'll be taking short-term loans, okay, and we'll be taking outstanding expenses, okay. We'll be taking income received in advance or unearned revenue, and we'll be taking some what we say long-term liabilities by like long-term loans and some bonds which company has issued, okay. And then comes the equity. Under equity, what comes? Share capital. Then comes the retained earnings, okay. Then any kind of reserves, whatever it is, that it comes under equity, okay. And then you have the total of shareholders equity and liabilities, okay. Just a short format I've explained you. You can have a look through this. You can make a note of this. Then tomorrow we will enter into each and every particular asset. Okay. We'll see in details about those assets. Next class. Have you written this? Shall I move forward then?
Yes, sir.
Have you written this? So your format is vertical format. So write down all the values in this way. The time 30, almost 52 minutes. Okay. See, this is the format what we have discussed. Now the next point what I need to mention is tomorrow we'll start with this simple theory. We'll discuss about this simple theory tomorrow. First page. Okay. We'll discuss about this is what we have already discussed today. We will discuss difference between IFRS and US GAAP. These are two schools of thoughts, but what difference they have is ideology difference. I will explain you about this, why they are different. Okay, both are meant, see, both the standards want to give the best output or results to the users. Okay, and both the standard have the same aim, that whoever is using US GAAP or IFRS as an accounting standard should get the best result, isn't it so? But still they differ, and where they differ, why they differ, we'll discuss. Then we'll discuss about like why we prepare balance sheet and what we want to know from the balance sheet. What an investor looks into a balance sheet, or what idea he gets about the company's position from the balance sheet. Or is it only the, see, what he sees in general? I will explain you that one. Asset is what we have discussed. Liability is what is a liability? Liability is nothing but because of some past events, future obligations are
Occurred.
created. That means this is Mr. X. He has made a contract with some SBI bank 3 months back. Okay, 3 months back, that he wants to take a loan after 3 months. So suppose this is the month of November. So he went to bank August, September, October, November. In the September month, he made an agreement with SBI manager that in November he will borrow some 50 lakhs from the SBI bank. So now he is borrowing 50 lakhs. Is it an obligation for his future? Yes. So future obligation is created because of the past event or contract. It's a liability. We have already differentiated between the current assets and current liabilities. Current assets and non-current assets, and current liability and non-current liability. Don't worry, tomorrow we will discuss all this in details about the balance sheet. We will finish the balance sheet chapter. Okay, already we have started the income statement, and format is done, and we will discuss about the elements of income statement after discussing about the elements of balance sheet. So next class would be the conclusion of these two topics. Okay.
Okay.
Where is that? Yeah, I will finish these two. Then only what will be left over is statement of changes in equity and OCI. In one session, I will wind up that also. See, 3 classes are required for these 4 topics to be covered. Okay.
Okay,
Tomorrow we have a class, right?
Tomorrow is Tuesday, right?
sir. No, sir. Tuesday.
Wednesday. Then you
Okay.
can, if you want, I can schedule on Thursday also. 2 back-to-back days if you require. I said now one day before you should tell me. That's it.
Sir, please.
See, this week we have classes on Monday, which is done today. Tuesday, you don't have. Wednesday, you have. Thursday, you don't have. Okay. If you want on Thursday, I'll put the class on Thursday and Friday. I don't mind. the call is like you should decide and tell me. I'll take like that. Fine.
ठीक है, you can so. ठीक है.
You should say. That's what I'll be ready. So this is like tomorrow I will finish this and this part. That is this till income statement. Next class, that is Wednesday, will be the conclusion of these two. Thursday we will finish other comprehensive income and this equity part till here. Okay.
Oh.
Wednesday, Thursday, and Friday we will practice some 20 questions from this chapter. Okay, fine.
All right.
Okay. Let's say.